Hi everybody, this is Osprey from mychartcoach.com, and in this video we're going to take a look at GEMP here. This was the after hours runner. This stock was closed the day at 524 today, and in after hours trading it closed at 1175. So that puts it up here above the top of this red line here. The red line is the bottom of the gap. There's a gap over here back in August between low of day on this red candle, which is this red line up here. The top of the gap is just above 1850, and then the bottom of the gap is the top of this red candle down here, just below 1150. So going forward for tomorrow, you want to see the share price stay above the bottom of the gap level. So if it's staying above 1150, that's going to signal upside potential, and then you're looking for a potential gap fill, a run up there, like I said, up to 1850 to 19 there, just above 1850. That would fill the gap. A drop below 1150, then you'd want to see this 1050 level hold. That was the high close from back here in January. And that's a big resistance level from earlier in 2017, and so staying above 1050 would be very bullish. So keep an eye on GEMP tomorrow. Another one to look at is NKE. This is Nike. They reported earnings, and they had a huge explosive move in after-hours trading. You could see it traded up fractionally today. It was bouncing off of the 50-day simple moving average down here at 71, held that level. Right now, it closed at 79 in after-hours trading. I mean, I believe that is a new all-time high for Nike as far as my analysis goes. That's the highest level ever in the history of the stock. I believe this was the all-time high right here in June, and trading at 79 is above that level. So basically you want to see Nike stay above 76. You don't want to see it pull back in here. This is the all-time high close right here. If it can stay above that level, that would signal it wants to keep pushing higher. So this is going to be a big gap up open tomorrow, so we're going to see if it can gap and run. All right, so if this is the Nike monthly chart. I had to go back on this is a 20-year chart, and so if you look here in the past 20 years, the all-time high was 75.91. Okay, and so right now in after hours trading it's at 79. So that's what this is going on, what we call a blue sky breakout for Nike. There's no overhead resistance. Look at this 20-year chart. What a beautiful chart, right? You could have been writing this for years. It's just basically in a very strong uptrend, and you can see up here this 76 all-time high. Now it's 79. There's no other candles. You know, there's no other trading at this level. So there's going to be, this is what we call a blue sky breakout. You're just going to have to follow the intraday charts to be able to find the next resistance levels as it breaks out higher. So this is a huge move for Nike. Congrats everyone. We'll see if it can keep the uptrend going tomorrow. Okay, so look at banks. Banks are in play. They had their stress test. And so after the stress test, several banks announced that they were going to hike the dividends, and they were going to do buybacks. And so the banks were running, and after hours trading today, most of the banks were. And so there was the Fed did reject over here the plan for Deutsche Bank, and so for their U.S. arm of Deutsche Bank got rejected, and then there was limited capital plans for Goldman Sachs and Morgan Stanley. They limited the capital plans. So basically, those are the three that as far as my brief analysis went, were the ones that had some negative, didn't work out as well for those three, but the other stocks are running, and so as you can see here for XLF here, this is the financial select spider, and it did close up almost 1% today. It's been in this nasty downtrend. Look at all those red candles. I mean, this was a historic drop. You know, that this was one of the largest drops in the history of the XLF here, to have this many red days in a row, and today it did bounce. It looks like a bullish Haremy reversal pattern did form today, and so basically what you're looking for tomorrow is a close above EMA 4 at 2665. That's going to be the big level to close above. With the banks running everything, you know, the next level to break above that will be the EMA 8 at 2686. You know, every single one of these candles, ever since this candle right here closed right at EMA 4, they're all below the pink line, below EMA 4. Once there's a close above, that's going to be a nice sign that we could get a reversal going here for the banks. Similar to this candle here, there was a pullback, and then the reversal started right here after this pullback above EMA4. So tomorrow could be the start of a new run for the financial sector. So you want to be on top of this one. Okay, take a look at Wells Fargo here. This is the big winner. As far as the banks that I checked out, this is the one that seemed like it was up the most in after hours trading. You can see it closed up fractionally today. It had been on this big pullback. You know, they drove the banks down heading into this stress test. And then this is currently trading at 55.63 in after hours trading. So that puts it way up here. I mean, that for you're going to see the next charts. This is a way bigger move than the other stocks. So keep an eye on Wells Fargo. It's going to have a big gap up open. It looks like tomorrow. It's going to be all about breaking this red line. That's at 55.67. Notice how they kept it right below that. That's the 200-day simple moving average. That's the top moving average on this chart. Once Wells Fargo is above the 200-day simple moving average, that should signal that it wants to break out higher. And then you have the high close up here at 56.14. Will be the big level to break. The closing price back here on the 23rd of May. Okay, take a look at HBAN here, Huntington Bank shares. It's at 1520 in after hours trading. That puts it up here. Above the 100-day simple moving average, the gold line, and above EMA 13. That's back above EMA 4 down here in the green line. That's the 50-day simple moving average. So if it can stay above 1519 tomorrow, that's going to be really bullish. And the big level to break is going to be that middle Bollinger Band at 1530. A close above 1530 could signal the possible start of a new uptrend. And then you're looking for a break above the high close up here, just above 1560 back here in last week in June. Okay, so let's look at Citigroup here. Closed up 2% today. It's currently at 68 in after hours trading. This is another very nice move. So that puts the share price up here. It closed down here below the middle Bollinger Band at 67. So if it can get a close above this dotted purple line, that could signal the possible start of a new uptrend. It closed above that level last week, but it failed to hold and pulled back. It was still consolidating. And so the middle Bollinger Band is also the 20-day simple moving average. Bullish stocks in an uptrend form candles above that level. And so what you'd be looking for is for that level to hold, and then a break above the green line here. That's the 50-day simple moving average at 68.59, and then just above that's the 300-day simple moving average at 69.26. Okay, take a look at JP here. Okay, so this had a bounce today. It did close above EMA 4 during the trading session at 104.76. You know, after a pullback, it had closed below EMA 4 on the 12th of June, and today was the first close above since that day. That's a bullish change in trend. That signals the possible start of a reversal here. It is at 106.80 in after hours trading, so that puts it above the 200-day simple moving average. That's back above the red line and above EMA 13 at 106.49. If it can stay above both those levels, look for a run up here to the middle Bollinger Band at 107.91. It needs to turn that level into support to get a new uptrend going. Back here in June, it got above that middle Bollinger Band, the dotted purple line. It failed to hold and pulled back. And so you're going to know if JP Morgan's ready to make a bullish move, if it can get above that level and turn it into support. Okay, look at Bank of America here. Closed up 1.5% today. It's at 28.92 right now, and so that's putting it above EMA 8 here and right below the next two key levels to break. EMA 13, the orange line, and the red line, 200-day simple moving average. If it can get above this 29.09 level, look for that middle Bollinger Band at 29.34 to be tested. Once again, failing to turn that level into support, you know, signaled more downside risk. Once it turns into support, it's got to get above that 50-day simple moving average at 29.78. Okay, look at American Express here. Okay, so this is actually at 98 in after hours trading. It closed the day down here just below 97. It was holding the gold line here. That's the 100-day simple moving average at 97. Now at 98, that's pushing it up here by EMA 13. That's going to be the next level to break, that orange line. You can see that's been the tough level to break on the bounce. It got above that level temporarily but pulled back. If it can close above EMA 8, that'll be bullish. And then you've got the middle Bollinger Band and the 50-day simple moving average. You've got these two key levels right here lined up. Once it's above the 50-day simple moving average at 99.64, that should be the big signal that American Express wants to push higher. And then it's been in the sideways channel here, and so it's the top of the channel is the closing price here on the 22nd of May. That's the big level to break, just above 102.50, and then the bottom of the channel is down here up for the low close on the 20th of June. And so you can see here the strong sideways channel. Here's the top of the channel, and then here's the bottom, and so right now, it's at the bottom of the channel, and so it's at 98, and so you're looking for a run back up to the top, getting above the 50-day simple moving average, and then working its way back up to 102.50. If that's the reaction to the banks, we just have to see what happens tomorrow. The banks have been under big pressure. Right now, it's looking like there's going to be a positive reaction pre-market, but you never know. They've been pulling them back, so we just have to see how it plays out. These bank stocks have to stay above EMA 4 on the daily chart. For RF here, that's currently at 1811. It closed at 1815 in after hours trading, so it's just above the pink line. It needs to stay above that level. If it closes back below, that'll signal the bears are still in control. The risk is that it drops below support here. It's testing the 1780 support level. That's the low close here on the 19th of April. And so if that level fails to hold, that's going to signal major downside risk. If it can close above that EMA 4, it could get a bounce going. Now let's look at the stocks here. Okay, so Deutsche Bank, their U.S. arm failed, it looks like, and so this has been in a really nasty downtrend. It's currently at 1046 in after hours trading, and it closed at 1047, so it's basically flat on the news. The bottom line is, if EMA 4 at 1060 here, this pink line, remains resistance, that just signals to stay short, avoid, you do not want to be long. Even if it stays below EMA 8 at 1077, you can see when it's tested that level, it's failed to get above, it's failed to stay above, and it keeps pulling back. If those two levels remain resistance, it's going to signal more downside risk. Once they turn into support, and basically once it gets above this middle Bollinger Band at 1108, you see it trading above 11, that's when it could be like, okay, now things are looking better, it's reversing. This is when you're thinking about going long Deutsche Bank. Right now, the bears are still in control. Okay, Goldman Sachs. Okay, so they've had it sounds like they were limited. Yeah, basically, it's at 223.39 after hours. They are doing the share buyback and increasing their dividend, and so that is helping, even though it didn't work out as well for them with the stress test as most of the other banks. And so at 223.39. That's keeping it above EMA 4 and just below EMA 8 here at 224.46. It closed above EMA 4, signaling it was heating up today, but it has to get above that EMA 8, and then it's all about this middle Bollinger Band at 229. Once it turns that into support, it can get a new uptrend going. I mean, look, for months it's been failing to turn the middle Bollinger Band into support, and the downtrend continues. The good thing is that for the bulls is it keeps coming back over and hitting that level, and so it's continually. I guess we can go across the closes there, and it lines up pretty good. But it keeps working its way back up to that level. So that's the top of the channel, and so as long as that continues. Down, you load off the bottom, that's what it's bouncing off of now, and then you sell off the top unless it can break out above. Okay, and so look at Morgan Stanley down here. Okay, so Morgan Stanley actually had a nice day today, and then they didn't do as well with the stress test, and it's pretty interesting. It had one of the most bullish days. It had the biggest bounce, and then it's actually down in after hours trading. All these other ones are up in after hours trading, and Morgan Stanley was actually down, and it was the one that was up the most during the trading session. So what a head fake, right? Yeah, so now it's below EMA 4 at 48.10. It has to get above 48.10 to head higher. If it closes below that level, it's going to signal that the bears are still in control. It would be pretty crazy for this to have another red candle tomorrow after all those red volume bars in a row. And then it had the green one, but to have to not be able to get support and bounce here. It's below the 300-day simple moving average. It's below all the moving averages on the chart. I mean, it's been really driven down. So yeah, it would be it just seems like this is where it should bounce. But if that 48.10 is resistance, that signals the bears are still in control. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. Okay, thank you.